Today is Tuesday, May 30th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financial markets this morning, Alan, central topic of late has been the debt ceiling. Alan, what are the market implications of the tentative debt ceiling increase agreement?
Okay, well, this tentative deal removes some of the sovereign risk of holding U.S. Treasuries, which pushed yields lower and the interest rate market futures higher. So lower yields undermined the dollar today, which is under pressure and maybe forming a one-day reversal top. So the charts may be turning a bit negative with in conjunction with this news. It's also supportive to stock index futures as interest rates are pushed lower. And of course, lower interest rates tend to support the stock index futures.
Good segue there, Alan. In regard to stock index futures, there's been good strength in the NASDAQ futures, really leading the way for higher stock index futures. What's the significance of this?
Well, the NASDAQ tends to lead in both directions. It led on the way down. It's leading now on the way up. In fact, the NASDAQ has been very strong, and now the S&P is right at highs for the year. Of course, the NASDAQ made new highs for the year quite a bit ago. So when the NASDAQ leads, it's a sign that we'll probably see follow-through gains across the board for the stock index futures. So short-term gains, at least short-term gains, are likely with all of the indices, and I would think going to work higher.
Lastly, Alan, short week this week, but what reports might have the most market impact?
Okay, so tomorrow we'll have the JOLTS report. That's the Job Openings and Labor Turnover Survey. That's guessed at 9.35 million. That number has come down in recent months. Also, we'll have the Beige Book tomorrow. That's a 1 o'clock report, and that is a report that is put out by the Fed in advance of the upcoming policy meeting. Thursday, we'll have the ADP employment report guessed up 160,000. And then we'll have the May Institute for Supply Management Manufacturing Index at 47. And then on Friday, the employment situation with non-farm payrolls guessed at up 180,000. Private payrolls anticipated to be up 160,000, and the unemployment rate anticipated to move a little bit higher to 3.5%.
Mark, let's talk about the grain markets. What factors do you think will drive ag prices this week?
Well, as usual, a lot of factors will drive prices. Russia continues to voice their displeasure with the Black Sea Grain Initiative. Vessel inspections through the Black Sea were just over 3 per day here in the past this month. That's the lowest since the deal was struck last summer. Meanwhile, they're offering wheat at lower and lower prices each and every week, and it continues to weigh on global wheat valuations. We're also hearing higher production forecasts coming out of Brazil for their second corn crop. But far and large, the biggest factor driving prices will be U.S. weather. Dry, warm weather this week will continue to grip much of the nation's mid-section. This should enable farmers to wrap up plantings across the Midwest. The extended outlook does offer better prospects for rain in the 8 to 12-day window, and that seems to be what the market is focusing on here today as prices under some pretty heavy pressure. These rains are going to be crucial for corn and soybeans to avoid some early season stress. The only rains of significance this week are expected in the southwestern plains as they continue to get relief from months of drought.
And Mark, where's the money right now as it applies to the grain markets? And, you know, when we look at the funds and the large spec traders, what's that look like?
Well, index funds just continue to shed length in the agricultural markets. I've been commenting for months now the inverse relationship between the Fed funds rate and the index positioning in the ag markets. As Alan alluded to, financial markets now are bracing for the increased probability of another rate hike. We saw index funds. They were net sellers of about 7,500 contracts in the ag space last week. That's reduced their long position now to the lowest level since October of 2019. Money managers, they were also net sellers in the ag space last week of about 19,000 contracts. They continue to hold a modest short position. Right now, money managers are net short nearly 100,000 contracts of corn. Flat in the soybeans, long a little bit still in the meal, have a short position in soybean oil. Well, they also hold a very large short position in Chicago wheat of about 120,000 contracts.
And lastly, Mark, crop progress report today as opposed to yesterday because of the holiday. What are your expectations today?
I think we made good progress in planting corn and soybeans last week with the drier conditions. I suspect corn plantings are in that mid-90s, 92 to 96%. That's up from 81% last week, and the average at this time frame of 85%. We'll get our first corn crop condition report tonight, too, and I think we're going to see pretty good conditions, 65, maybe 70% of the crop in good to excellent shape, above the historical average. Bean plantings likely in the low to mid 80s, 80 to 84%, up from 66 last week, and the historical average being right around 65%. Spring wheat plantings also likely have reached the low 80%, and that's now nearly caught up with its historical average. And I look for another modest increase in the winter wheat crop conditions, another 1 to 2% increase in the good to excellent.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.